Now, we want to talk about your Q3 results. Obviously, we did see the same trend which we've seen in most banks where the top line is a bit under pressure, but we're seeing a recovery definitely on the bottom line. But first of all, if I can just ask, what should we expect differently now that you're the new CEO? You did take over just this July.
Yes, thank you very much. What we would see is a more definitiveness in approach in terms of being more focused on corporate governance and also in our business, that is focusing more on where we have a lot of wins today, trying to improve efficiency in the bank and improve profits for shareholders.
Well, we'll be coming to the efficiency discussion in a minute. But first of all, tell us about your strategy, given the change that the CBN has proposed for new banking rules that would see the end of universal banking in Nigeria. We have heard in the press that Skye Bank is going to stay as an international bank, but are you also going to embrace the holdco structure, because we do know that you have some subsidiaries?
Well, that decision hasn't been taken. The obvious thing is to have a holding company structure, but there hasn't been any final decision on that. But importantly is that the commercial bank, which is the main bank, will be an international bank, and we would be able to do our business within and outside Nigeria as we do presently.
All right, now let's come to the efficiency discussion, because your cost-to-income ratio at about 75% is a big talking point among analysts. We do know that the bank has announced a branch restructuring plan to obviously boost efficiency. Can you just give us a sense of what you're working on with regards to bringing out that cost-income ratio?
Well, our cost-to-income was high partly because we had an aggressive branch rollout strategy and also an aggressive rollout of ATMs, and that worked for us when the economy was booming. Now that things have slowed down, what we're trying to do now is review the branches. We're streamlining, cutting down and shutting some down, and also looking at our overall cost structure. So the benefit of the costs would come through next year. We'll start to feed through. It's feeding through already in that it's not increasing and it's starting to reduce.
So what is your target cost-to-income ratio then?
For next year, it's about 63%.
63%,
and
okay.
For the year after, in the mid-50s.
All right, let's take a look at loan growth. I mean, it's been quite slow, probably across the industry. But what are your targets with regards to your loan deposits ratio? Because we do see that at 84%, slightly above the minimum requirement, but that might be to some extent because of this significant decline in deposits, which we saw come down about 12% in the quarter. But just give us a sense of where you see your loan book going forward.
The target is to grow loans by about 20% this year. Two factors are making loan growth slow generally in the industry and also with us, and that's because the economy is slow. There are very few good deals or transactions in the first place, and we also have a much more cautious approach to lending. So that is making the whole process slower and fewer loans being booked.
All right, and then of course, loan loss provisions is another talking point among analysts. I mean, I was just looking at a note from Vertiva Capital where they put your coverage ratio at about 54%, which they say is the lowest among your peers. Does this point to a surprise in Q4 with regards to recoveries or reclassification of loans going forward?
There will be no surprises. It's something we've looked at. Our loan level at about 18% is quite high, but there are efforts being made to bring it down. It will be a much slower process because a lot of our loans are targeted at projects and long, medium-term lending, and so the process of unwinding all those projects starting off, which we're beginning to see. So coming into the end of the year, we should have some improvement in our loan loss provision, and also going into next year, that should improve. Also, the fact that about a third of our loan loss is in margin facilities, and a good part of that, once AMCON takes on, would get thrown into AMCON, and that would about a third of that will come off our books.
And then, of course, the NPLs are at 18%, or they're about 18% right now. What is your target going to 2011? How do you see things changing going forward?
First thing is to bring it below 10%. Hopefully we do that this year, and then my target for next year is 5%.
Right. And then what impact do you think the new prudential guidelines would have on loan reclassification and classification going forward? Because some analysts had pointed to the fact that this probably would make banks provide much less for loans, looking at the historical rules for provisioning in Nigeria.
Well, yes, banks would provide less for loans, and maybe rightly so, because if you look at a lot of our funding is for projects, and really what banks haven't done properly up till now is be able to structure financing of a lot of their transactions properly. You would give a transaction a shorter period than is required, either by moratorium or by gestation or repayment. And once you have that kind of mismatch, it starts to create problems. But banks are now looking at all these things properly and trying to get all those estimations right. Once they do that, then there would be less requirement for provisioning.
Okay, I'm just quickly running out of time here, but I want to touch on your revenues. We saw a sharp rise in commissions and fees, up to about 70% in Q3. Can you just give us some insight into where that is coming from?
Well, that is coming from increased level of loans in the third quarter, mainly increased trade financing, and also treasury activities.
And then lastly, if I can just ask, we do have AMCON coming on stream very soon. It's expected to engender a lot of M&A activity. Is Skye Bank going to be involved in that at all?
We looked at the banks, and we don't see the level of synergy that would make us go in to try and get involved. So we're not going and get involved.
So we shouldn't anticipate anything from Skye Bank?
Nothing from Skye Bank.
All right. We'll have